Right. So the next thing that we're going to do is we're going to take you on a showcase of companies right around Northern Ireland that have raised money in recent times through equity. Now, there is a phrase out there, you can't be what you can't see. And we can, of course, we can have a conversation around what role models are out there and whether there's enough of them and so on like that. But in this video reel, you'll get some real companies who have raised real money, and you'll learn a little bit more about them and their story. Couple of things that I need to do before we get to that. First of all, I want to remind you to please tweet at Ambition to Scale. That is the hashtag. It's really interesting to hear your points of view and to reflect on what you're getting from our speakers or the questions that you have for them. And also, lots of people say that it can be difficult to network in this virtual environment. So that's also another opportunity for you to engage, and also not just with the speakers, but also with each other. Now, I also want to tell you that we're soon going to meet Stuart Harvey again from Detactics. Yesterday, he told us about his experience of networks and accelerators, but today we're going to look forward and we're going to get some insights from him about his equity journey and the differences between them. And also, you're going to get another chance to put your questions to him as well. So that's also going to be coming up in a little while. Another thing I want to say to you now is, yesterday after we finished, it's interesting, somebody came up to me, obviously I mean that in the virtual sense of the word, but somebody came up to me and said, you know what, if everybody who's on the call today and yesterday, if everybody took away two things from each day, one thing from each day, one thing at all from this conference, but turned it into action, this would be a genuine success. So do take time out, if it's 10 minutes at the end of today or during the sessions or something, just to note down on a notebook, in your head, on an email, somewhere, just the key things that you would like to take away and that you would like to implement as a result of listening to our speakers today. And then, in order to make sure that it happens, ask somebody to hold you accountable. Maybe it's this day next week, maybe it is in a month's time, and where they ring you up and they say, well, what happened after you sent me that email and you told me that you were going to apply for this, or you're going to think about that, or you're going to reach out to this person, or you're going to have a conversation with your business partners, or whatever it might be. At the end of the day, conversations that we're having on days like today are successes if we can turn the kernels of ideas and inspiration that we get into action. Okay, now, one last thing before we show you that video is we are now going to run another poll, and I'm just going to switch on my timer here as well. Can I ask the production team to please turn it live? And again, you have 30 seconds to answer the question. Again, it's on the right-hand side of where you can see me now. So what we'd really like to do, just like we've been doing all along, is to hear your thoughts. It was very, very interesting yesterday to hear your reactions to those polls and to be able to get the real-time live answers from the panelists that we had. And we'll do the same again today. I'll make sure we do the very same thing again today. We take those answers, we put those to the panelists to get their thoughts. And you have 3 more seconds to fill out this poll. 2, 1, and done. Great. Thank you very much. And now let's hear from the people who walked the walk as they talk the talk with us today.
In spite of the recent challenges faced by Northern Ireland SMEs, many have continued to secure investment to help their business grow and succeed. While there are too many to mention them all, here are a few businesses that have raised funding. We are Paradox, a sustainable, plastic-free beauty company that created the world's first cordless 3-in-1 hair tool, raised £3 million, which they have used to invest further in research and development. This investment will allow them to launch another industry-leading patented invention in the beauty industry. Tech company Leopa will use secured funding to further develop their AI-based lip-reading software to increase the accuracy and usability of the technology, which will open up new commercially lucrative opportunities. On the back of this investment, the company are set to secure their first contract in the automotive sector and to extend trials of its SRAVI healthcare application to several NHS health trusts. Automated Intelligence is a market-leading data management solution provider with significant experience supporting transformation projects across central and local government, health, retail and more. The company raised £1.75 million, which allowed them to launch their sister brand, Hivera, in the financial services market The investment funded critical research activity that refined their cloud platform to meet the specific needs of the financial services market. CADshare is a customizable customer support system platform for use in the manufacturing industry. The company fundraised £520,000, which allowed them to expand their team and company. The funding will allow the company to target sales in Germany, a key target market for the company. LoyalBee is a powerful yet easy-to-use loyalty platform for businesses that promises to increase customer retention and drive repeat sales. They raised £725,000 from local investors and intend to use it to build partnerships, grow the team, and upscale their marketing efforts in Ireland and the UK. They partnered with Visa to expand into the Irish market, and this investment will allow them to accelerate rollout of their app to local businesses across the market. Cumulus Neuroscience develops technologies for the pharmaceutical industry and has developed a neurocognitive platform which helps monitor diseases such as Alzheimer's. It raised £1.1 million, which it used to further develop its technology, scale its commercial activities, and commercialise the platform in the global clinical trials market. If you have the ambition to scale your business and want to find out more about alternative sources of investment, contact InvestNI, British Business Bank, or Intertrade Ireland and find out how you can grow your business today with access to finance.
And it is my absolute pleasure to bring Stuart Harvey back in to talk to us all today as well, to refer to the second part of, particularly of his career. And for anybody who wasn't with us yesterday, first of all, you missed a fantastic session and a great interview where we spoke to Stuart, who is a co-founder, angel investor, as well as currently CEO of Detactics. And you can catch up on that by checking out our Twitter hashtag #AmbitionToScale. But for now, Stuart, could you maybe move on and tell us a little bit about the journey itself of raising equity?
Of course. Hi, Susan. Nice to talk to you again. Yes, well, I've so far been an investor or a member of the management team in 8 or so businesses. They're mostly in tech and involve creating a software product. I was a co-founder of 3 of these firms. Each of them was based in Northern Ireland, although typically, looked to a much more international market. And all of them sort of went through similar phases, I suppose. So the first was to look at pre-seed and seed funding to get the business off the ground. Probably do your market research, hire a few people into the early team, perhaps build a POC. My experience, seed funding usually comes from sources of friends and family, or your own money. Then you're probably looking at proof of concept grants. We talked yesterday about accelerators, and here in Northern Ireland, for example, we have a great grant scheme that's offered by TechStart NI and publicised strongly through Catalyst, the Catalyst Accelerator. Often in those networks, you will come across angel investors. They will have some money, but maybe more importantly, they can provide you with mentoring or industry experience and hold your hand as you get involved in a conversation with early stage venture. Here, with a Belfast hat on, they would be companies like TechStart NI and Clarendon, and I've worked happily with both of those firms. I would say that broadly speaking, that pre-seed phase, most companies might expect to raise somewhere between £1 million and £2 million in seed funding, certainly here in Belfast. That will then often lead on to a Series A funding. So that's much more serious venture money. And again, you'll get that money for a share in your business. It's a big milestone for a company, and it should allow you to bring your product to new markets. I guess that the average venture investment early stage business here in Northern Ireland is somewhere between 2 and 5 million. As an example, at Detactics recently, we closed a £2 million round with Kernel Capital Power Equity. And that round was focused very much on international business expansion. We talked yesterday about service businesses, and I think that's an interesting trend that I've seen more of in the last few years. Where private equity is coming into the market and often looking to allow founder teams to so-called take some money off the table while injecting growth capital. PE-backed businesses tend to be much more cash generative. They're often based on perhaps a consulting business that's trying to create a product out of their consulting expertise, and they're often much closer to EBITDA. So they're close to profit or at profit some points, rather than being a pure product company, which usually involves a good deal of investment up front before you get any revenue from sales.
I think it's very, very useful to, demystify all of that language, Stuart, because we can often hear, VC versus PE versus Series A versus Angel, etc. And as people are listening to this, what do you say to those who might be nervous about taking their business to the next level and engaging into all of this world?
Well, I think preparation is everything. Sort of understanding what the journey is going to be like. I think that's a key part of having a successful dialogue with venture. We talked yesterday, Cian, about, in my opinion, sometimes it feels like the successful thing is getting a venture investment. That's just the start of it. That's just the start of a process. And I think you really do, you need to be getting prepared for what that journey will be like. And
when you say get prepared for what that journey would be like, what were you prepared for, but also what weren't you prepared for?
Yeah, it's a good question. You'll need to have a business plan and a pitch deck that outlines what you're intending to raise and what you're going to use the money for. In my experience, most VCs don't spend a lot of time looking at the numbers of your plan, but they are seriously interested in the qualities of the people who wrote it. So fundamentally, they've been around the block so many times, they know that strategy is easy, but the tactics are hard. And the key to success at a startup is really the ability of the team to be adaptable and agile, so that they can flex and pivot if the plan doesn't quite work out. To your earlier point, some companies choose to use an advisor who can offer advice on capital raising and help them structure the pitch. You might be fortunate enough to have those skills and that advice coming to you from a co-founder or an early stage angel investor. Great if you can achieve that. I'm neutral on whether you should use an advisor, but I certainly don't think you should rely on them too much to do the heavy lifting. Ultimately, this will come down to a bunch of guys wanting to look you in the eye, you and the senior team in the eye, and make a decision on whether you're up for this in the longer term. Another thing I think that I would add that's beneficial is to try and think about governance in the longer term. Try and think about what your board would look like. At the Tactics, we sought out a chairman who had really out from outside of Northern Ireland. He's based in Edinburgh, Graham Patterson, and he has strong knowledge of growth equity and M&A, and in fact had successfully sold his own business to NASDAQ. And Graham has been a great source of advice throughout our fundraising and has managed to take some of the pressure off the business, operationally day to day, and you can't let that go, because ultimately that's going to result in a less confident investor or a poorer price. So you've got to keep both things running simultaneously.
Stuart, yesterday we spoke to Piers Linney, and a point that he made is that a lot of well-meaning investors, as soon as the ink dries, they're busy, they're busy, and that you can be, no, he didn't use the word lured in, but let's just use that for the purposes of being clear, is that, a company may be attracted to an investor because of the non-monetary benefit that they bring. But as Pierre said yesterday, they can be busy, and it certainly may not be intentional. But what was your experience of making sure that you could also unlock the non-monetary benefits of your investors?
Yeah, so I mean, there's quite a lot of talk in the industry at the moment, I think, about choosing an investor in your business niche, because they will bring you a network, and they can advise you in recruitment of senior staff, etc. My take is, typically those specialists tend to live and work in bigger cities, and in our case, big financial centres like London or New York. So that really wasn't available to us. My honest experience has been that you tend to hear a lot more about the strength of a venture firm's network and the mentoring you will receive from that than actually comes into play. But you've just got to be mature and realize that will be the case. Those guys are constantly working on raising their next fund. Often they're generalists, understandably, here in Ireland. They won't know the territory as well as you will. So you've got to try and work within those constraints.
So realism based on knowing what you want, as well as putting your own hard work behind it. That really is that's the formula.
Yes.
Okay. How would you characterize the ambition then of the investors that you were pitching to?
Well, certainly they were ambitious. I would say, I'd like to think at the Tactics we got the right blend of investors, ones who are willing to challenge us, but also came along with common sense on what it takes to be successful. I found our guys to be extremely supportive, in particular last year in 2020 when COVID arrived and everyone was unsure about the consequences of lockdown. I think they saw the strategic importance of data. We're a data company going forward, and they didn't force us to make cutbacks or to pull back on our hiring. If anything, they actually encouraged us, I think, to double down and be more courageous. I think it's important to try and find a good fit with the culture of your senior team and that of your investors. Here we have about 9 board meetings a year. They're designed to challenge us, on our performance, and certainly hold our feet to the fire over, on whether we're hitting our targets. I'd characterize the discussions as sort of high honesty, high respect, but there's no shouting, and the culture is one of being quite coaching and supportive to us. But that is in a background where largely we have been able to hit our milestones. So we've been, fortunate to execute on the business plan. What I think it needs to finish off answering that question, Susan. I think you need to be trying to find somebody where you end up with a partnership rather than some uneasy alliance. And you should do your due diligence on your investors as much as they're doing it on you.
Can we just really clarify this when you say about finding a partner rather than an uneasy alliance? So what I'm gathering from you, Stuart, is that it's that partnership is more so a meeting of minds as distinct from somebody who's niche in your sector. And if that meeting of minds, maybe that means around ambition as well as expectation. Would I be right in that? Am I summarizing you correctly there?
Yeah, I mean, I think the way to really drill down into that is, as I say, to approach it with trying to do due diligence on them is to ask to speak to companies that are already on their roster and go out for lunch or a coffee with the CEO of that firm and ask her how it was when the deal was closed, how the board meetings run, when they didn't, when they ballsed up on something as a company, how did that all play out? And I think that you should be mature enough and wise enough to do that, and your investors should encourage you and give you access to those people, potential investors.
We're about to go to the audience again, Stuart, and so I would encourage anybody who has got questions ready to start thinking about them, because I'll be opening this up to the floor in a couple of moments. But now that we've had a good understanding of getting investor ready, like you spoke to us about yesterday, as well as the overall sense of what needs to happen, is there any nuances, Stuart, that you could point us towards that would characterize the different equity journeys that has happened along the way from your own personal experience?
Well, I've invested or been a founder in 8 businesses. I was saying, I think 3 of the firms have made an exit so far. One of the businesses went bust, and I lost my investment. Actually, interestingly, the 2 businesses that made the strongest returns so far are the ones that didn't involve venture, but it was a long haul. It was a long journey. I've had a reasonable experience of all sides, and in growing companies, my reflections would be the following. I suppose a founder who gives up equity to hire co-founders and investors, is likely to build a more valuable company faster than the person who isn't willing to part with equity, particularly if it's a global market. Second, I think if you need as a founder to be willing to step aside and take a different role as the team and the business grows if you're not a good fit.
Sorry, did you say if you're not a good fit or they're not a good fit?
I think as a founder, you need to be able to make that sort of trade-off between the make it rich versus be the king thing. Do you want to have power and control the destiny of this company, or do you want to get a return for your money and for your investors' money? And for me, that's a persistent niggling question. A lot of firms, if you take venture funding and you don't have an answer to that question, eventually your investor will answer it for you. And you've got to understand that.
That must be a tough question to consider. Am I a good fit to the business I built thus far? Because thus far is not, what got you here won't get you there. That must be a tough question to, as you say, have niggling at the back of your mind, but a very good one to ask and answer regularly. And as you say, if you don't answer it, well, then the others around you, who you actually as well have brought in, may do it for you. And any other thoughts on that, Stuart, before we go into the Q&A, about any other nuances in the equity journey, of the different equity journeys that you've had?
No, I don't think so. I'm happy to sort of give you a few comments on what I would say to people who are maybe a bit nervous about taking their business to the next level.
Well, I think that might be a very good idea now, given the fact that you've just put that question to our audience, for sure. I mean, in essence, what would you say to those who are nervous, not just necessarily about taking the business to the next level, but just thinking bigger and and in terms of thinking with that ambition to scale, just about dipping that toe into the water or throwing themselves full bodied in?
Well, I mean, I would encourage people to give it a go. I've seen people attending this event are sort of well down the road in that journey. I would stress, don't underestimate the power of knowledge and networks that you've received, through working at a big company or in some previous industry. That should be a prerequisite in my mind for most people. Take the team with you in terms of rewards, options, or equity. Make sure that everybody is aligned there. Don't get fixated on failure too much. I mean, I'm quite a conservative person in terms of my attitude to risk. But I've sort of learned as time has gone on that if you're in the technology space and if it all goes wrong, you're in the technology space, you can probably go out tomorrow and find another job. Maybe considering a sort of portfolio career. I had the benefit of working 10 years at big firms and then the last 15 years in startups and scale-ups, and it has been enormously exciting and challenging. No time more so than now, I think, in 2021, coming off the back of what happened last year, the economy, the society in general needs your idea and your guts. And I try it it should be a blast.
Well, on that note, on that blast, let's open it up to the floor and let's hear from what the audience would have to say on each of those points.